Good morning, everybody, and welcome to Expana's Tuesday Morning Market Roundup. Today is Tuesday, August the 20th. Hope your day is going great so far. I'm looking forward to listening to someone we haven't heard from a little bit. I always appreciate her updates, and that someone is Karen Rispoli. And Karen is back from a combination of being on the road a little bit and maybe a little time off. And Karen's going to speak to us about the ever-present egg market. Give us a brief update today. Good morning, Karen.
Hey, good morning, Ross. Hey, everybody. Well, there is certainly no shortage of things to discuss as it relates to the egg market this week. In fact, I could probably talk for the next 20 minutes and still not get it all covered. So I'm going to just keep this fairly broad-based to cover as much ground as I can in our short little window here. But the short story is this: there is simply not enough chickens laying eggs in the US right now to cover the level of demand that we're seeing. And it has pushed just about every single item that we quote here in the US to at least a 52-week high. People that I talk to who've been in the industry for decades are telling me that this market is unlike anything that they have ever seen before. So let's start with a look at Midwest large, which of course you know by now is our most widely referenced benchmark for the US table grade market. We're looking at nearly 40 years of history here, and as you can see, while we did witness higher market values back in Q4 of 2022, we've never seen anything close to the prices that we're seeing now during the summertime when demand is typically more muted. So what's at the heart of this? As I mentioned, there simply isn't enough production in the country right now to support the level of demand that we're seeing. This is the number of layers on hand excuse me, as of July 1st. We will get fresh data from the USDA later this week, but the red line is current, the blue line is 2022, and the green line is the 10-year average. What's interesting is that obviously we're well below average, well below normal, so dire, I would say, production levels based on where demand is. But what's fascinating is that we're actually about 25 million layers more in production than we had back in 2015, and yet our market values are almost double what they were back then. So there's a couple of different factors that can help explain this. Population growth, altered molt schedules, the type of farms that have been hit with the bird flu, and probably at the top of that list is retail demand. While it's normal to see demand pick up at this time of year with the start of the new school year, what contacts across the country have been reporting to us in terms of demand is far beyond what's typical. And at the same time, we're seeing very strong export demand as well from Canada. So this is a look at the USDA shell egg demand indicator. This is basically an estimate of demand for shell eggs based on current production levels and inventory clearance rates. And as you can see, it's extremely elevated, not just for August, but really for any time of the year. I mean, it's nearly on par with what we were seeing in January during the winter, when obviously everybody's hunkered down at home and baking and doing things like that. And here too, this is really due to a combination of factors. Chief among them has to be competitive price points. Even though wholesale values have shot up a whopping 75% over the past 5 weeks, many of the nation's largest retailers and big box stores have actually been lowering their shelf prices. Now, some of that has to do with the fact that a certain percentage of business is contracted on formula rather than tied to the market. So not all retailers are feeling the impact of these market increases, which means in turn they are not passing those on to the consumers. But even in cases where they are feeling that impact, many retailers are still opting to keep shelf prices down in order to help maintain or grow their market share. And as the tale tells here, it's a strategy that clearly appears to be working. But if that wasn't enough to convince you, this week's inventory report from the USDA should do the trick. These numbers are just incredibly low. We are looking at the lowest inventory reported since January of 2018 as of this past Monday. And again, it's August. We're not talking about a pre-Easter or a pre-Thanksgiving market. And that naturally has market participants wondering and worrying about what the fourth quarter is going to look like. We are naturally going to see a fair amount of production come back ahead of the holidays, which should provide some relief in theory. The big question question mark, though, is how much production will be lost to the bird flu. It's been a month since we've had any new outbreaks, but between September and December of 2022, we lost more than 12 million birds. And last year, in just November and December alone, we lost 11 million birds. So I would say stay tuned and keep your seatbelts fastened.
Karen, those visuals, those charts provided were fascinating. Really, if there was any doubt, as you said, we don't have that doubt anymore. Thank you very much for that update. Very interesting times for the egg market, and we'll look forward to the next time we have you on the Tuesday Morning Roundup. Have a great day. And that brings us to Dylan. And Dylan, at the beginning of Karen's conversation, I think we all heard her say something to the effect of there just simply aren't enough chickens laying eggs. And while there might be a chicken and an egg problem in the chicken industry, it's not necessarily about not enough chickens laying them. Isn't that right? How you doing, Dale? Good to see you.
Good morning, Russ, and good morning, everyone. Exactly that. You'll see that we're actually seeing quite a lot of eggs on the broiler side of the industry right now, but it's not necessarily translating on a one-to-one to expansions in overall supply. And even unlike turkey, where we're actually seeing reductions in production potential there, the chicken industry is sort of the opposite, where we're starting to see some signs of expansion. It's still a little bit too early to tell whether or not this is a new prevailing trend, but certainly some interesting developments over the past week that I wanted to jump into here, starting with broiler egg sets. And you can see this year has really been all about weekly seasonal expansion, weekly expansion in the seasonal levels here. I could have probably said that for any time during the past year, with only a couple exceptions early on in January. We've seen seasonal all-time highs. In fact, just 2 weeks ago, we observed a new all-time high, about 250.3 million eggs being set in just a single week. And this is certainly eye-catching, for sure. And it's not all that surprising, though, especially to anybody who has been following the pullet placement figures. So if we take a look at the placements, again, you'll see that the most recent data we have through the end of June represents a new all-time high, just shy of 9.8 million pullets. This is certainly a big number, but it doesn't really explain the here and now. If we walk back, considering the fact that these birds take about half a year to reach egg-laying maturity, that brings us to late Q4 and early Q1 of 2024, where we did see more or less some relatively consistent uptrends on a year-over-year basis in pullet placements. Now, 2024 was a little bit rocky at the beginning, but we did see these numbers quickly rebound, ultimately to reach a new seasonal high by the time that March rolled around. So, this does help to explain a little bit as to the here and now. It does help to suggest where this production landscape could go moving forward based on the recent figures. But what about where the rubber really meets the road? And this is sort of unique to the broiler side of the industry, where chick placements aren't necessarily trending upward on that clean, consistent year-over-year uptrends that we saw when it comes to egg sets. If we take a look at the chick placement figures here, you can see that it hasn't been all that consistent. We have seen some ups and downs along the way so far this year, and there's a good reason for that. Karen mentions disease, high-path AI, that certainly plays a role here. But even more so, I would say low hatchability, which has been a persistent problem for the industry over the past several years here. Hatchability is currently positioned 79.5%. We've even observed a dip as far down as around in the upper 78 percentage point range. And even if we throw, say, 2 to 3 percentage points on top of that national average, the industry would still be below historic expectations. So hatchability is certainly introducing quite a lot of inefficiency into the production landscape right now. But nonetheless, we have begun to see some fairly consistent year-over-year expansion, not only above year-ago levels, but above the 5-year average when it comes to chick placements. So far be it from a major trend at this point, but it does certainly get you wondering whether or not this trend could continue and what this might mean for supply moving forward. Right now, the broiler head count is positioned about 2% below the previous year. If this trend continues, there's certainly some speculation whether or not the chicken industry could close out 2024 actually above the previous year. It's certainly been a rocky road, but time will certainly tell, and we'll be sure to provide some updates along the way.
And thank you, Dylan. Yes, above last year. That would certainly be a song that the buyers would like to hear being sung. Whether or not that will actually come to fruition because of all the examples that you just gave us remains to be seen. So we, just like Karen, we will look forward to the next time that you have an opportunity to give us an update. And to all our viewers, thank you for joining us. This has been Expana's morning market roundup for Tuesday, August the 20th. Hope your day is a great one. Thanks for joining us.